Let me just say Happy New Year, Happy New Year, Happy New Year. Okay, hello, good people. I'm Chris. And if there's one thing I've learned from the markets, life, faith, and finances, it's this: your portfolio never outgrows your level of financial understanding, at least not in my opinion. The more you know, not just what you own, but why you own it, how you size it, and when you act, the better your investment outcomes. All right. Why knowledge is most powerful asset. Why knowledge is your most powerful asset. Most people focus on stock picks first. What should I buy? But the real question is, what do you understand? Knowledge isn't just information, it's applied understanding, the ability to interpret, contextualize, and act wisely when opportunities arise. You got to be able to take advantage of the opportunities that the market presents to you. But you got to be able to understand the opportunities that's being presented to you. Otherwise, you're just running in circles, right? When I started with energy and water stocks, I wasn't just picking stocks. I was asking questions. Not could this go up, but why would anyone need this product in the future? That's knowledge-based reasoning. That make me think of some of the things that Warren Buffett says when he picks stocks and what have you. Not saying I'm anything near similar or in the ballpark of Warren Buffett. I'm just saying I had to come up with what works best for me. As my knowledge grew, my positions became smarter, not just bigger. How knowledge affects every part of investing. There are 4 areas where financial knowledge actually move your results. Number 1, position sizing. Knowledge tells you how much to risk and how much to protect. For example, high confidence, high conviction, larger size. Unclear thesis, small exposure, or no trade at all. What do I mean? High confidence, high conviction, larger size. I'm a believer in NVIDIA, and my sizing up of NVIDIA shows that. I'm a believer in Palantir, and the sizing of Palantir shows that. I'm a believer in VTI, VOO, and again, the sizing of my position supports that, right? So when you have done your research and you're confident in a certain stock or ETF, it should show in the way you invest, in the way you deploy and put your army of dollars to work. So, number 2, timing and patience. Knowledge allows you to wait for better entries instead of impulsive buying. Your entry matters, right? You learn you learn patterns like pullbacks versus breakouts. You learn market seasons. You learn sector rotations. You learn earnings interpretation. That's not noise, that's context. If you don't believe it, go do your own research and figure it out for yourself, right? Don't just take my word. Number 3, risk management. If you understand fundamentals and structure, you avoid panic selling, you avoid overtrading, you avoid emotional reactions to headline because you know this company still works the way I expect it to. That's devotion to data and not drama. Got to be committed to something in this financial journey of investing. If not, you will regret it eventually. And number 4, exit strategy. Knowledge tells you when a position no longer fits, not I need every dollar back. But this no longer aligns with my thesis. It's time to reposition. This is stewardship, not stubbornness. All right, how to grow your financial knowledge. Here are actionable ways you can grow your understanding, not just your watch time. Read daily, but with purpose. Not headlines, contextualize analysis. Understand why markets move, not just what moved. I like to know the nuts and the bolts. What was working, what wasn't working, why did it do what it did? When you learn this, you can apply it to any stock or ETF you're interested in, right? Learn a framework. Example, sector cycles, earnings behavior, technical versus fundamental signals, right? Value versus growth indicators. Choose one and master it before adding another one. Let me say that again. Choose one and master it before adding another one. Track decisions like a journal. Write why you entered it, what you expected, and why you exited. Over time, you'll begin to see patterns in your own behavior. Some patterns you'll see that you like, some patterns you'll see that you need to adjust or sharpen, right? So, understand risk reward. Ask, do I get enough upside for the risk I'm taking? If the answer isn't clear, walk away. Knowledge grows your portfolio. When your knowledge level increases, your confidence increases. Risk discipline increases. Pattern recognition sharpens. Results begin to compound. This is not a myth. This is a repeated application over time. It's called rinse and repeat. You can do it over and over and over. You can see yourself making gains or crazy gains, crazy returns over and over and over once you learn the principle and you apply it, right? So here's your first lesson of 2026. Grow your financial knowledge and your portfolio growth will follow. I like the way that sounds. I'm going to say it again. Grow your financial knowledge and your portfolio growth will follow. Don't chase gain, chase understanding. Knowledge shapes your decisions, and decisions shape your outcome. If this message has helped you in any way today, please hit that like, subscribe, and share it with someone ready to grow. May your 2026 be full of knowledge and results that reflect it. Walk in wisdom, my friend.